Have you ever wondered?
While some people are making hundreds of thousands of dollars in trading and others are barely passing a prop firm challenge. A recent statistics guide released from the prop firm is telling 99% of the people who are buying the challenge are failing the challenges, and only 1% of the people are making consistent income from the prop firms. So, what are the major differences between the people who are consistently making profits when compared to the people who are failing the challenges? So, what are the different kind of strategies that are used by the profitable traders and unprofitable traders? After doing lots of research between the profitable traders and the unprofitable traders, I came to know the profitable traders are using the liquidity concept. So, these traders are using the liquidity concepts with risk management and making huge amount of money from the marketplace. So if you are an unprofitable trader consistently losing money in the markets, you can use these liquidity concepts exactly like the top 1% traders and become consistently profitable traders. So this video covers everything from basic liquidity concepts to the advanced level liquidity concepts that help you make lots of money in the markets. So watch the video till the end, grab your coffee, let's dive in. So let us discuss about what is the liquidity first. Liquidity is the fuel for the price. If the market wanna move from the point A to the point B, it needs liquidity. It can't move in a straight line. So always the market needs to hunt the retail people in order to move the prices. So that's why you will see in the marketplace daily there will be stop hunts at any given price. So this is the basic understanding of the liquidity. So if you understand the logic behind the liquidity inducement theorem, the market makers can't move the price in a straight line without having the liquidity. So always they should engineer the liquidity like this, and they should take the liquidity and then push the price. Same thing happens over and over and again. They will induce the people, trap the people, and then move in the real direction. So this is how the market moves. Always without the liquidity there will be no movement in the price. You should think the liquidity as like fuel for the car. If a car wanna move from a city to city, it needs liquidity. If the car wanna move from village to village, which is short distance, it needs less liquidity. So it's the same concept applied to trading. If we are trading in the 1 minute time frame, the liquidity is very low that required to take this high. If the same thing is happening in the daily time frame, it requires lot of liquidity for the big moves. If we wanna go to the bigger distances, we need lot of liquidity. If we wanna go cover shorter distances, we need less liquidity. So the same point applies to the trading. If you assume the liquidity as the fuel for the price, if the market makers wanna move the price to the longer levels, they need lot of liquidity. So that's why they will attract lot of retail buyers and smart money buyers and manipulate the traders, take their stop losses, and they will move from point A to the point B. And also if the market makers wanna move some market through like 50 pips or something, they need less liquidity. Like they will do the medium stop hunt and then they will move the price. So the same thing applies for the smaller time frames. If the same setup happens in the 1 minute time frame, then it is the smaller manipulation. So it's all based on the scale of the manipulation. So think of it as a country. If you want to move to the one country to the another country, you need lot of fuel, right? So think as the city. If you want to move from one city to the another city, this is the medium.
Now you completely understood about the minor, major, and medium inducements. Now we will discuss about the how to identify the inducements in the real market. Normal smart money people will understand the direction of the market with the break of the structure. If the structure is break, they will place the buy stops at the order blocks. To be honest, they don't know how the market works. The market doesn't have a structure. The market never follows the structure. If you are an experienced individual, you can tell that the market has no structure. This is completely false knowledge. Everybody repackage this stuff and sell it like a courses. It is full completely false knowledge. The real market doesn't have any structure. It works on the terms of the liquidity. It will take the liquidity and it will take the fuel and it will run the price. As I explained before, the liquidity is used as the fuel. There is no clear structure for the marketplace. Everything is works on under the liquidity. So you have seen, if you see any chart, it will look like this, not this. If every chart is looking like this, everybody will become the billionaires and millionaires from the trading. So that's why if you can understand the liquidity concepts, you can definitely make huge money from the marketplace like me. I made 15k dollars last month alone with these liquidity concepts I'm teaching. And if you deep down into the smart money stuff, they will do the time frame analysis. They will think like this. In the micro time frame also, they will think the market will move like this, and they will take retracements and they will take number of losses. But the market doesn't move like this. It's completely false knowledge induced by the marketers. But how the market really works? Let's see, there is a liquidity from the left. That's why this reversal happens. In this also, in the short term leg also, there will be a lot of inducements will be there. Inducements. Let's say I will explain you clearly. I removed everything so you can explain clearly. So let's say this is the 15 minutes leg. Okay. If this is the 15 minutes leg, in this the 1 minute leg will be like this. Inducements. Again liquidity inducements. It will move like this. This is how the price moves. Every time frame need liquidity to move the price, whether it's the 15 minutes or whether it's the 1 minute, any time frame. Let's say there is another 1 hour liquidity from the left. Now the 15 minutes will change the direction. Now what the 1 minute will look like? 1 minute structure will look like this. It will take inducements. Same thing. So if it's the daily liquidity, the 15 minutes will look like this. The 15 minutes will look like this if this is the daily liquidity. And in the 15 minutes, the 1 minute will be like this. Small liquidity chunks. Small liquidity chunks will go up. This is how the exactly market works. It wholly depends on the liquidity to the liquidity. So if we can identify any major liquidity, if there is any major liquidity is there, and the major liquidity is taken, now we can take lot of trades. We can trade here and target this liquidity. This is how we will get huge RRs like 30 to 40 RRs. These type of trades are very rare. Everybody in the Instagram and everything are showing you they are taking 40 RR trades using the SMC. This is completely false knowledge. They are inducing you. See here, this is the exact trade we can take and target next liquidity because this is the major liquidity. But if no major liquidity is taken out, if you're taking the trade here, you should target the short-term high here because you should understand the liquidity very in depth. And also, not every liquidity sweep is the liquidity sweep. Sometimes the market will move like this. In this case, after taking the liquidity, the market will reverse. Same thing happens over and over again. So these are the major inducements. If you can spot the any trade here at the major inducement, you can capitalize this huge swing. You can easily get 50 to 100 dollars from the swings. This is the hack to the algorithm. Nobody teaches this stuff. Everybody will talk about the 1 hour or 2 hour, but here some opportunities you can capitalize these type of huge gains in the marketplace. Nobody on the internet talks about it. See here, everything in the marketplace is the liquidity. This high is taken out, stops taken out. This is the fake OB. If you see, many people think it is a fake break of the structure. Order blocks liquidated, again it was taken out, then the price reversed. This stuff happens on regular basis. If you see here, this is how the market is moving, right? Liquidity. This is the liquidity taken out, the market reverse. Again, this is the retail trend line. If you see, lot of retail people are buying here, buying here, buying here, buying here. Now there is a lot of liquidity automatically here. If there is a lot of liquidity is there automatically, the price will take this liquidity and then they will exactly reverse the price. This is what happens daily, even the 1 minute time frame or 4 hour time frame. The time frame is not important because the time is fractal, right? Always after the liquidity is taken out, the real order flow of the market establishes. Real order flow of the market establishes once the order flow is confirmed. See here, everything is liquidity. If you see here how the price is moving, every time these smart money people are getting trapped. They will think this is the break of the structure. They will buy here, but they don't know this is the liquidity. Here at the top, I will sell the market. This is how the liquidity concepts work. I can show you n number of examples because I get bored of the shit. If you see again, retail trend line. This is the retail trend line. 4 taps, right? First tap, second tap, third tap, fourth tap. Retail trend line got taken out, and also a liquidity was taken out from the left, clean low. See here, exactly after the liquidity was taken out, the market reversed. I will enter here and target this liquidity exactly. And also, if you see here, what happened? Liquidity got taken out from the pip, the market got reversed. And also, what happened here? Same stuff happens every time. Liquidity got taken out by a small pipette and the market was reversing. What happened here? Retail trendline liquidity. Lot of retailers are getting trapped. They are taking buys. All this liquidity was taken out. I will buy here. If the liquidity was not sufficient, they will engineer the liquidity again. Same thing. They will trap again and then they will move the prices. Same stuff happens over and over and again. See here, always, every time the market will trap the retail people and smart money people. Liquidity stuff. Everybody in the YouTube is talking half knowledge about the liquidities. They don't know exactly what the liquidity is. See here, this huge speed and aggression. Why the market is taking the liquidity with a huge speed and aggression? Because it increases the curiosity in the retail people. If they are seeing big candles taking the high or low, they will exactly enter the market here. Thus, it indicates lot of the liquidity. Same thing here. It took the liquidity. I will buy. It all based on the time and price. Everything is the market is the liquidity. See here, the market here is dropping, right? Lower high, lower low, lower high, lower low, lower high, lower low. In this case, if you see, this is the liquidity, right? Because a lot of the smart money people will trade here. A lot of the smart money people will, what they will do? They will trade from this order block because they will think this is the money transfer is happening here and they will trade here. So that's why this reaction came. This reaction is completely engineered by the market makers to induce the liquidity, and they will induce all the positions. They got all the money from the retail people and smart money people, and they will sell. I will exactly sell here using my entry pattern. Target the next liquidity because these are the daily liquidities. We will get huge errors when we are trading the daily liquidities. These type of trades are very rare. We can get one or two in a week. That's it. It's very rare. Everything is algorithmic in the trading. Everything is algorithmic. If you see, by the pipette it was taken out. Small pips will be in buys here. Target next liquidity here. Sells here. Buys here. Sells here. This is very easy type of trading once you master this style of trading. Very easy type of trading. See here, liquidity price was re-engineered the liquidity. If the liquidity is not sufficient to move the price from direction A to the direction B, what I have explained in the video, they will re-engineer the liquidity. So that's why they re-engineered the gap and they re-swept it. The market was going up. Same stuff. I am showing you the 2017 charts. Same thing happens over and again. Always the liquidity is the fuel. See why the big moves are happening after the liquidity is taken out. See here, liquidity is taken out, big move is happening. After the liquidity is taken out, big move is happening. Same here, if you see, liquidity got taken out, big move happened. So always what we can say from this, liquidity is the fuel for the price because this is where stop loss will be. Stop losses means nothing but money. If the money is collected in the marketplace, the market should move because the market moves from the supply and demand, right? These are the exact concepts what I used and made my money. I'm giving you some insight about the concepts I'm teaching you because I am getting a lot of DMs daily asking them. Please teach my concepts, please teach my concepts. So these are the concepts I use, guys. No secret stuff, nothing. These are the concepts I use. I have over 80% of the win rate by using these liquidity concepts. Simple thing. If you see how we can capitalize this move, simple. This is the liquidity sweep. If you see the candles tell the story. This is the sweep. There is no candles closed after the sweep. Strong engulfing candle. It indicates the market wanna move down. That's it. We can exactly capitalize this and target this liquidity or even this liquidity. See, a lot of retail people got engineered here. If you see, a lot of retail folks got engineered, a lot of trend lines got engineered. All this engineered liquidity got taken out. This is exactly how these markets functions, and also a lot of smart money people got trapped here. See here, liquidity grab, huge push. Always the huge pushes come from the liquidity grab, and where the market reverse again. Liquidity, smart money trap. Smart money trap got taken out. The market got induced the liquidity and then it went down. Always the market functions the same because it needs liquidity to move the prices. Again, same here. Smart money trap, liquidity inducement, the market reversed the direction. Simple stuff, guys. No need to overcomplicate anything in the trading. This is very hack for the trading. If you can exactly master this concept, you can easily make 15k to 20k dollars. If you have like 200k profit account, you can easily make 200k per year. The just what you should need is the correct mindset and the risk management and the proven strategy. That's it. Everything is easy then. See here in the 2005 charts, these liquidity concepts are working. See how they are engineering the liquidity. Lot of retailers, lot of retail people are thinking breakout, huge breakout is there, then the market is going to drop. But these are the liquidity. They will sell here and the stop losses will be here because they don't know how to trade. And here we will take the longs, small stop losses. This is a daily time frame, that's why this is big. We usually have 5 pips to 2 pip stop loss. If you see our risk reward, it is more than 130. These type of trades are very rare because I'm showing in the daily time frame, so that's why it seems like they are occurring on the very fast sequence, but it takes weeks to occur this. These are very high problem. And also we take trades every day intraday by taking the session scalps etc using the liquidities. So this is the basic stuff, guys. And if you wanna know my exact strategy, proven framework, I'm offering one-on-one mentorship, only one-on-one mentorship for the qualified students. I don't take the students who are beginners because my stuff is pretty much advanced. They need to have some prior knowledge from the smart money concepts, means smart money order blocks or retail concepts. I'm not like any gurus, just offer any course and leave the students. I will exactly take care of every student and respond to their messages, and in 90 days I assure you, after taking my mentorship, you will be making at least 1k dollars. It depends on the problem challenge you take because I provide with from psychological aspects of trading to the technical edge. I provide everything that a trader need to make 10k dollars from the trading. So this is my basic proven framework of my mentorship. So I have dropped my number on the description. If you're interested, just hit me a DM. Peace, guys.